Welcome back. Hope you're having a fantastic day. We're going to take a look at Bitcoin in the market, see what's going on. Had a little update today. The Dow ended up about 0.74, 1.13 on the S&P, and 1.95 on the NASDAQ. Tech stocks were leading the way today with a little bounce back. We'll take a look at that in a minute. But in the news, recession is the talk now, with the Fed coming out saying they're going to raise rates a 0.5 point at their next meeting and probably another 0.5 point at the following meeting, and that they understand they now have to get serious and tough on inflation, on their fight against inflation. All investors are now looking at inflation. So if that's the case, why did the markets bounce today? Well, investors are rebalancing and getting ahead of that rate hike. So we'll likely see some downside tomorrow, maybe the rest of the week. We'll have to see how it plays out. But traders are betting on an aggressive Fed and predict a 0.5 point hike in May. The traders are betting the Federal Reserve is likely to raise interest rates by 0.5 percentage point in May and June meetings to battle inflation at a faster clip. Market expects a more aggressive, quicker rate hike cycle. That rose after the Fed Chairman Powell talk on Monday. The Fed is expected to reach 2.25% on the Fed funds rate by the end of the year, a peak of 2.75 by September 2023. So we shall see where it's going to end the year at and what the effects of that. But we're already starting to see reverberations through the market. Recession is one talk. You're going to start hearing more and more about the yield inversion. Yield curve inversion. You're going to start hearing more about that. And also the big thing is the housing market. So mortgage rates have jumped. The 30-year mortgage was up to 4.72% on Tuesday. That's the highest it's been in a long, long time as a result of the recent spike in rates. Economists are now lowering their home sales forecast for the year. So most estimates at the end of the year had the average 30-year rate hitting 4.5% by 2022. But it's already up there now, and it is having an impact on real estate markets. So we talked about that the other day. Keep an eye on real estate market out there. It will adjust as rising rates increase the cost of a mortgage, which affects the purchasing power of the buyers. And again, the first place you're going to see this knee-jerk reaction is with the builders, because contracts will be getting canceled. If a buyer put a house under contract that's under construction and rates go up, and they cannot afford that property at the end of the construction phase, then that contract will fall out and the builder is going to have to put the house back on the market. Builders can drop prices much faster and will drop prices much faster than homeowners to get rid of inventory. They will sell at a break even or even a loss just to get those houses out of inventory and off the books. So keep an eye on the new home builders and watch what they're doing on prices. This is the Bitcoin market today. Had a nice little pop overnight. Bitcoin jumped from 40,800 up to 43,351. It looks like about a 6% pop. And now it's coming back a little bit and kind of bouncing around in that $42,000 range, trying to decide if it's going to continue down or if it's going to try to rebound. And a lot of this was short covering, short squeezing. And now we have it going the other way, because what do people have a tendency to do? They have a tendency to short the bottoms and long the tops. The same thing is going on in the market. So let's take a look at the Dow Jones. Nice little pop here over the last few days. The NASDAQ leading the charge, had a nice pop here over the next few days, and the last few days, S&P, same thing. And these are not insignificant bounces either. This is from the 14th of March. So over the last week, basically last 8 days, that's 8% on the S&P. Let's see what that is for the NASDAQ. We're looking at about 12% on the NASDAQ, 10 to 12%. And the Dow from the bottom, about 7%. So those are pretty big moves in terms of rebounds from these lows. And as we have seen, that's kind of what happens as the market delevers, reprices, and unwinds from all of the monetative easing that we've been seeing throughout the markets. Oil's dancing around that $105, $107 to $115, $113 price range. Gold and silver are down. So let's go back and take a look at Bitcoin and see if we can see a pattern developing here. This is Bitcoin on the 4 hour. We were just looking at the hourly. Now we're on the 4 hour. And what you can start to identify when you're looking at these 4-hour ranges, like we were looking at the other day, is you can see levels of accumulation and distribution throughout these ranges here with price in terms of what it's doing. And coming from this first distributive top, price dropped down, kind of consolidate a little bit, dropped, consolidate a little bit, dropped, until it got to this bottom range, that $35,000 bottom that we called back in January, with a consolidation. And now price is trying to work its way back up, but has not been able to do so. There's just a lot of pressure. There's a lot of headwinds in the economy. And with the Fed out of the game now, it's making it more difficult for price to bounce significantly. Let's take a look at the daily. And we've been following this wedge pattern here that's developed, waiting for clarity in terms of the direction of how this is going to break out as it's testing in this range. A rising pennant like this coming off a downtrend, a lot of times we'll have more continuation to the downside potentially. There are analysts out there that are projecting this is going to bounce to the upside, kind of equating it to what was going on over here. But over in this area last year, this was more of a falling channel versus a rising wedge. So a little bit different of a price action, and in a consolidation phase waiting for that retracement. So this could potentially be more of a distribution type of a setup here versus accumulation for another pump, but we'll just have to wait and see how it plays out. It's really difficult to identify and understand where that could potentially go. We've been looking for that retrace and for the altcoins to run behind it. But with the economic environment we're in right now, not so sure, how and if that will play out. And, basically price has been running in this channel and consolidating. Let's take this away here. Consolidating in this channel here, like we've been kind of following for the last several months, with the top here and the bottom in this area. Get my marker going with the bottom here. So this could be looked at a couple of ways as, either a parallel channel or somewhat of a rising channel. And if you look at the overall trend in Bitcoin throughout the years and throughout the cycle, you can see these areas where Bitcoin has kind of run through somewhat of a sideways, that's not a very straight line, but a sideways channel before it pops up. So this could be another sideways before popping up. If you go back in the history, somewhat, obviously ups and highs and lows in this sideways consolidation. So you've had several areas where we had these sideways consolidations, sideways consolidation, and sideways consolidation before the next leg up. So that is something that could potentially lead to another leg up. And the other thing that we're looking at, we've been tracking when you get price on the weekly. Let's see what this looks like. And we have been watching our moving averages, right? So the 50, 100, and 200-week moving average price right now is still rejecting off the 50-week moving average, finding support on the 100. If it loses that, it could go down and test the 200-week moving average like it's done pretty much every time. If you look at it on the daily, price is now rejecting off of that 100-day moving average, finding support on the 50, but still below the 200. So we'll have to see how that shakes out. For that, let's go back to the weekly and check in on our Gaussian channel, and let's see what we're looking for here. We're still rejecting the midline of the Gaussian channel. And as we've discussed before, whenever price rejects that midline of the Gaussian channel, it can go and check the bottom, potentially go below the bottom. And we've looked at the percentages that it will fall below the bottom. Sometimes that can be 30% below the bottom there. And if we go here on this one, price fell 40% below the bottom there. So 30 to 40% below the bottom of the channel when it went down and broke through the bottom. Where does that put price here? Don't know if we want to look at that, but that could potentially put price at 30% below 23,000. So that's not too bad right now. As this continues to, the longer it consolidates in this area, the higher this bottom of the channel gets. Right now it's at 33,000. What we're looking for is we're looking for price to hold at 36,000. That's where it closed. I know it wicked down to 33, but we're tracking the closes at 36,000. That's where the bottom so far has held, has not come back and retested that price. It's wicked down below it, but it has not closed below that price point yet. So let's turn the Gaussian channel off. So the thesis is, if price can hold above 36,000 and continue on from there, then that may be the macro low that's being put in through this range right here. If you draw that line, we've been looking at that. And I like to use the closes versus the wicks of these macro trends. And that's where you can see a consolidating lower macro trend potentially being put in on price as it goes through the cycle, like we saw back here in 2018. That would put it kind of right in this area. And of course, other than the pandemic, it potentially would not have broken below that last level. The pandemic obviously was a different environment over here. Price capitulated there, came back above, broke over, came down below the base of that level that it put in 2017, 2018. But I think once it came back from that capitulation, came back up and over, if it hadn't been for the March 2020 pandemic, it probably would not have reached back down and broken that trend line. And I believe that that's where the bull market really would have started and was trying to start, was right around here in February of 2020 before the pandemic hit. Price had consolidated enough to start making its run. So these are the things that I'm looking at. It's kind of what I'm watching right now in terms of Bitcoin. We'll have to see what happens here over the next few days, how the markets react, and if the Fed next month really does have the resolve to get after inflation, and if inflation continues to persist, what the overall effects of that are going to be. So these are the things I'm looking at, and I will see you on the next video.